So this is Alan Olsen. Welcome to today's Tax Corner. Here we have a call-in writer, one of our listeners. It's Marva in Lehigh, Utah. She's writing, I'm getting ready to file my 2010 income tax return. I'm concerned about tax penalties. How do I avoid them? Well, Marva, let me tell you something. There's like 4 types of penalties that you can be assessed. Number 1, there's a filing penalty. How are filing penalties assessed? Well, you miss a deadline. You miss a deadline, and guess what? The IRS has a penalty waiting for you. If you miss a deadline and you paid all the tax, they can't do anything to you. You just missed the deadline. But if you missed the deadline and failed to pay enough tax to cover what was due, then they're going to be after you. And there's 2 types of filing penalties. There's a failure to file penalty, and there's a failure to pay. And those penalties will continue to accrue up to a maximum of 49.5% of the tax that's due on your income tax return. So, filing penalties are number 1. Don't miss the deadline, and by all means, make sure that you have your income tax timely paid. The second area that the IRS can get you in is estimated tax penalties. That is, during the year, the IRS expects that you pay your fair share of taxes on a quarterly basis if you're self-employed or retired or don't have other withholding sources done. So come April 15th, June 15th, September 15th, and January 15th, the IRS wants to see equal installments of your income tax liability that you're expecting to pay in that given year. The IRS does have safe harbors that they can impose relief on if they're paid within the stated amount that they've asked you to pay. And but you want to remember, if you're not sure what the rules are on estimated tax penalties, make sure that you understand them. The other area that the IRS can get you on is early withdrawal penalties. Now, if you're under the age of 55 and you're taking money out of your IRA and you don't have a good reason to take it out, guess what? The IRS is going to be on your doorstep with a 10% penalty on the early withdrawal. The last area that we want to talk about penalties is called It's Not My Fault penalty. This is typically where 2 spouses are filing a return together and one of the spouses is guilty and the other is innocent. The innocent spouse may be unaware that the other spouse had failed to report some income or taken a position that was not acceptable. And if the individuals are later getting divorced, the innocent spouse doesn't want to have anything to do with it, and they can the IRS can allow relief from the penalty for those who are innocent. So those are the 4 types of penalties. You have the filing penalties, you have the estimated tax penalties, you have early withdrawal penalties, and you have penalties associated with innocent spouse relief. This is Alan Olsen for today's Tax Corner.